Thank you for joining us for another episode of Cryptocurrent. Just one quick reminder. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. You should not treat any opinion expressed by Richard, the team, and their guests as a specific inducement to make a particular investment or to follow as financial advice. This show and any other Cryptocurrent production is exclusively for informational purposes.
Hello, everyone. Welcome to another episode of Cryptocurrent. Your host here, Richard Carthon. And today I have a special guest all the way out in Boston that is helping to run a really cool crypto venture fund. We have Rob Frasca, who's a managing partner with Cosimo X. How are you doing today?
I'm doing great. Thanks for having me here today.
I am excited to speak with you about all the different things that you're getting to see in the market. What I've learned through people who are in funds, you get to see really, really amazing projects, and you're getting to see kind of the latest and the greatest as it relates to innovations and all kinds of different verticals within crypto. But before we unpack all of that, first want to learn a little bit more about you. Can you give us a little bit of background about yourself?
Yeah, actually, great to be here. I'm a serial entrepreneur. I'm a .com guy. I've been building companies since 1993. I used to be a Navy pilot and flew off carriers. I was over at Carnegie Mellon. And this was back in the 90s. And I started the very first financial service on the internet. First stock quote server, first mutual fund site. I put Charles Schwab on the net when I was 29. I sold that company to Intuit and worked for Scott Cook and Bill Harris and Bill Campbell back then. Did another company, sold it in the AI space, sold it to Lycos. Most people don't even know what Lycos is. It was the number 2 portal behind Yahoo. A lot of people don't even know who Yahoo was. This was like way before Google. And we took that company public and then sold it to Telefonica. Did another company in the video game space, voice over IP, called Vivox, purchased by Unity. So I've been doing startups for a long time, more than 30 years. And I run today, co-founder of a firm called Cosimo Ventures. And we have a blockchain opportunities venture fund. It's actually tokenized itself. It's called CosimoX.com. And we did about 23 deals last year, investments in the space. So what we try to do is really get in early. So we try to get in before tokens or before the company even goes liquid. Super, super early. Obviously, when you get in so early, you're getting it really at a discount to the market. And that's what we're all about.
Right. Well, that's really cool. So first, thank you for your service. Second, awesome serial entrepreneurial lifestyle. I mean, the fact that you've already exited 2 companies is huge. Like, a lot of people don't necessarily understand what it takes.
Actually, 4.
4 companies. That is nuts, which just speaks to the ability that you've had to run operations in your companies efficiently and show value, and then be able to pick up and start again and just enjoy the grind of it also. It makes sense that you have kind of transitioned into now helping find some of these other superstars and help them on their way so that they can, become extremely profitable and also hopefully helping the various types of verticals that you are deciding to be in. So in the world of crypto, whether that's, financial independence, whether that is gaming or metaverse, et cetera, you now have the ability to have impact on way more verticals instead of being laser focused on one project, right?
That's right. That's right. Look, my partners and I, we got 4 partners, and we're all serial entrepreneurs on the team. We've all been there, kind of done it, did it. And we always kind of say, man, I've seen this movie before. I know I've been in this movie before, and I know how it's going to end. And I personally believe blockchain is the single largest value creation event in our lifetime. And I was at .com, I was in mobile, I was in e-commerce. I did companies in all that part of the world, all that kind of the ecosystem. And blockchain, I think, is far bigger than the internet itself. So for us to be investing in this space and looking at all these incredible projects and seeing the speed at which things are happening, the amount of value that's being created, and how global it is, it's just incredibly exciting.
So let's. I want to spend a moment on that really quickly. So again, you've been in Web 1, so Internet 1.0. You've been in Web 2 as we look at mobile, and then like things like Facebook and things being built on top of that layer. And now we're looking at Web 3, blockchain, crypto, and everything else. So what was your first introduction into the crypto space? Like, how does it even get on your radar? And like you said, you made the statement that blockchain is the single greatest event of our lifetime. Like, how did you come to this discovery so quickly once you learned about it?
Yeah, so my partner Ken Lang, he's one of these guys. He's a total polymath. He's Carnegie Mellon, PhD, neural nets, AI. 5 degrees, 40 patents. The guy is just. I did a company with him. We sold it. That was the company we sold to Lycos. It was an AI company. In fact, it invented most of the tech behind Google AdWords using AI neural nets. And he came to he's on our team. He's our CTO, and he came to us and he said, "Hey, look, this was right when Bitcoin came out, and he said there's this thing called Bitcoin, and you got to take a look at it. It's using this technology, blockchain, and it's basically solving the trust problem, the centralized trust problem." Now, a lot of people didn't know that we had a centralized trust problem, right?
Right.
I did, because I grew up in the internet. Like I saw in e-commerce, and one of the things that entrepreneurs do is the world sees problems, right? And what entrepreneurs do is they don't see problems, they dream of solutions. And you can always tell an entrepreneur, because an entrepreneur isn't faced by, oh, well, that's got 62 problems. They say, here, I'm going to solve those, right? And so in growing up in .com, I've always realized that we have look, the internet was designed to be resilient. And what we did in phase 1 was really decentralized content, right? And then in kind of phase 2, we decentralized communication through voice IP. I did a company there. And then we decentralized commerce, right? All of a sudden, anybody. So what happens? Anybody can be a content creator. Anybody can communicate. You and I are communicating across the world right now, marginal cost of bandwidth, and anybody can sell anything to anybody. But the problem is that our trust model is still centralized, right? If I don't know you and you don't know me, what do? We use a bank. We both trust a bank, right? Well, the problem is that when you connect a bank to the internet, they become a honeypot and they're a single point of failure, which is exactly what we're trying to get away from. Right. So I've always known that we've had this kind of centralized trust problem. And when Ken came to us and said, look at Bitcoin, I was like, holy cow, this is amazing. I was very skeptical because it's money and the world's big central institutions control money. But the technology behind it, blockchain, was like, wow, okay. And so that's when I realized we've got to get into this. This is it. Like this is going to be. I just knew it, And so we started buying some Bitcoin and getting involved early on with a bunch of different investments and technologies, and now it's just starting to take off. I actually think we're still in the first inning. I still think we're at that kind of 10 to 12% market penetration rate. But generally, that's when markets take off, right? They usually take off at that 10 to 12% rate.
Right. Actually, I was going to actually ask you about that, right? So everyone knows about like the curve, right? So you have your early movers first, and you go kind of to your first adopters, and then you kind of go down the line. Do you think? I think I personally think we're on the cusp of moving past like early adopters to first movers. But where would you see us kind of on that scale of where we're headed?
Yeah, so generally the curve goes visionaries, which is like 5%, right? And then the early adopters are up to 10%. And then to go from early adopters to early majority, Jeff Moore wrote a book called Inside the Tornado, Crossing the Chasm. Inside the tornado, right? So it's hard to kind of jump into the mainstream majority, that early majority. It's hard, right? Because if something's too complicated, they'll basically say, F that, I'm not doing that. Right. I would argue VR, for instance, hasn't jumped. Right. VR is just too. It's like I don't want to wear goggles and get dizzy and have wires going all over the place. Right. All of my living room. Right. So I would argue it probably hasn't crossed the chasm. So generally, that cross the chasm process happens right around 12%. And when it does cross the chasm, right, what happens, and this isn't me, this is like, lots of books written about that. I think it's called product diffusion theory. That's my Carnegie Mellon kind of geekery. It's on Wikipedia, there's a bunch of good stuff there. But there's a lot of alpha in the beginning, right? Because it's going from 0 to 1, okay? But it's not at scale. Like there's not a ton of there's not a lot of it. Whereas most of the alpha happens when you cross the chasm and jump in the tornado. So you asked me, long-winded answer to your question, I apologize, but you asked me, where are we? What you think? I think we're just now or over the chasm and we're just getting into the tornado. So I think, you're seeing global money come in, you're seeing institutionals all embrace this. Big custody firms like BNY Mellon and State Street announcing they're going to custody this stuff. Coinbase has got more account holders than Fidelity and Charles Schwab combined. And I think the key to all of this is that it's global from day one, right? So the internet wasn't global. When it first launched, it was really Silicon Valley, Boston, New York, and then it finally went global. E-commerce the same way. Now, boom, everything is global immediately. So I think we're just jumping inside the tornado. And I would tell you, to the entrepreneurs that may be listening or watching this, one of the biggest mistakes I made, and I made it a couple times, is that when a market's early, we all tend to say, it's too competitive, I'm not going in, right? Because everybody goes in, right? And so today I hear that from a lot of entrepreneurs. They say, oh man, there's 5 people doing this and I don't know, it's too crowded. I don't know if I should go in. And my answer to that is, only 12% of the people are in the market. There might be 5 people doing it, but all of those guys have almost no market share. And if it is the first inning, the bulk of the market is still going to come in. So go for it. Yeah. Like go for it. All right. Fight the fight. Because you're going to look back and go, man, I should have. Because all those boats are going to rise. There'll probably be a consolidation. Some will fail. But if you got a dream, at this point, don't be competitive, right? Now, like I wouldn't go compete with Coinbase, okay? Right? All right.
Yeah. But then they've also been in the market for like 8 years, right?
That's right. But if it's still early, right? Like I give you an example. I was general manager of Lycos.com. We were the number 2 portal behind Yahoo. And if you would have told me that Google, this new company, was going to be the market leader, and Yahoo and Lycos were be out of business or, blown away. When I was doing that, I would have told you were, high on drugs, right? I mean, Google was what were they, 12th to enter the market? Yeah, 14.
They were super late,
right? They were a lot later. And by the way, when did Google come into the market? It came in the early majority. Yeah. They weren't even there in the early adopter visionary phase. So, so that's why I look at what's going on in the market right now. You've got a lot of really cool layer 1s. You got a lot of really good layer 2s. You got a lot of people solving a lot of problems. But to think that the market leader today, and I'm a huge fan of Bitcoin. I think Bitcoin's going to be around forever. Okay. I'm a big holder. I'm a holder. I'm not poo-pooing Bitcoin, but I'm also a pragmatic person in the sense that there's a lot of problems that still haven't been solved. And I don't think we've seen everything in the market that we, that's yet to come.
Right.
And so right?
I just want to add to that. Like I talk to people about this all the time, right? If Bitcoin is digital gold, and if you look at the regular market and you look at gold, yes, gold is steady, but it's not the biggest market cap. It's not the biggest opportunity. It's always the technologies. And if you look at the rest of the cryptocurrency market, which in my opinion, crypto markets are blockchain startups, they're just under the umbrella of the coined phrase cryptocurrency.
That's right.
You're going to look at a lot of these projects whose market cap will flip Bitcoins. And it's just a matter of time, right?
Yeah. I mean, look, we invested in this. We invested in this currency called NDAU. NDAU. And it actually was built on the Cosmos Tendermint blockchain. It's its own native blockchain. It's been out there for, it's been mainnet actually for a while. It's designed to be basically a long-term store of value. So it's designed to be like Bitcoin, but it's also designed to have a yield. And it's also algorithmic to hopefully adapt to market conditions. So, this thing has been out for a while. By the way, the yield rate on this thing, when you lock it up for 3 years, is 25%. 25%. Okay. Wow. If you lock it up for 1 year, I think the yield is 15%. Now, the prices fluctuate. It's not a stable coin, right? So the price it was as high as 42. I think it's down today at 10. It's on KuCoin, a bunch of other exchanges. Anyway, but that is kind of like super early, right? So in other words, the team is really figuring out the algos and they're modifying it. And, I think there's around 15,000 people that hold it. Market cap on the thing is around, I don't know, 200 million, something like that. But anyway, the reason why we invested in that was exactly your point, right? It's so early that, the whole concept of creating this adaptive, intelligent currency that reads the market versus a free floating one is really profound. So let's take a look at that. And that's what, that's what this is. That's what this is all about. I mean, we did another investment in a thing called Ichi. And we got in early. We know the founder, and we love what they're doing. They're basically building stable coins for it's a stablecoin protocol for people with large treasuries, right? That want to announce. I think we're 14x our money on that deal. Right now we're a venture fund. We're not a hedge fund, right? So what we do is if you believe that you're in this. If you believe that this is the first inning, why the hell would you sell now?
Yeah.
Right. It's kind of like Amazon, right? When Amazon went public, you double your money. You're like, woo, I'm a rock star. Right? No, you're not.
So I want to talk about this for a couple of different reasons. I want to talk about a couple more of the other projects that you're in. But what's really great about you in this conversation right now is I try to impart to our listeners that time for good projects, you would typically win. If you look at historically, even in Bitcoin, if you bought at the top of any of the market, usually over the course of like 3.5 years, you still always win. You still become profitable.
I agree with that. I'm not giving any advice here.
No financial advice.
Caveat, no financial advice, right?
Right.
But and I don't have a crystal ball, so I can't predict anything. I can predict just as well as you, right? But I agree with you. I agree. It's just macro. It's just simple math, right? If you believe that we are in the first inning and we just crossed the chasm, if you believe that, then what you believe is that the market is going to grow exponentially, okay, from 10% to 80%. How many doublings is that? It's a lot.
It's a lot.
And so if you believe that, then in a macro sense, if you invest in that market, you're gonna kill it.
Right. And to speak to that a little bit more, again, just looking at what happened in Web 1.0, you had this gigantic boom. All of these companies kind of came out of nowhere, and a lot of them failed. But it doesn't mean that even with the ones that failed, there wasn't money to be made. There wasn't opportunities. But like, we're not there yet. We're not even close to where like, boom, now we have all these things and like all of them are going to make it. Like if you had to compare from Web 1.0, like how early we are in this, like I think one of the latest alliterations that I kind of got to was we went from being in this giant room with a giant computer to finally getting that like first personal computer. So like the internet's not even there yet. Like we're still like in the infrastructure place. Like how would you kind of compare that?
Yeah. So there's a couple of thought bubbles in here that I wanna share with you. So I believe that, look, you're right. We went from these big computers to everybody owning a computer to everybody having one in their pocket. And the one in their pocket has a camera, has a video camera, microphone, and does everything. We went from a world where we had to dial into a service to chat to a world where now you can go to any site to get content and communicate. And so every time, the world has just been kind of, decentralizing. And so this is kind of the next evolution. Like we started in the beginning, it's really the next evolution. Here's two fundamental points that are absolutely critical, in my opinion, that people need to understand. And I talk all the time about this. The first is this: what we're building now are not companies. Companies are centralized bastions of the old world. Think of them like the tower, and everybody goes and they have a hierarchy with a CEO and a board of directors, and we all go to that tower and we work, that shiny tower. And below that shiny tower is a town square. And that town square is loaded with people. The town square is the network, okay? The companies are the tower. And what we're doing is we're moving, right? And by the way, this is Niall Ferguson's book. I think I have it around here, The Tower and the Square, or The Square and the Tower. I always get it confused. But what we're building now are networks of people. And by definition, the value of that network is being distributed by the token of the network. And that means that everybody that owns the token and is part of the network owns a piece of the network, right? So if you think about Facebook, that's a centralized thing that's owned by Mark Zuckerberg and the shareholders, and you are part of that by feeding all your content into it, and he's making all the money off of you, right? What's that old adage? If you're in a service and you don't know what the product is, you're it.
You're the product.
You're the product.
Yep.
Bingo. So that's the old model, right? Is the centralized tower model, right? You go on Twitter and they can censor you and say, I don't like you, and you're ghost banned and you're out. Why? Because they're in a tower and they can control it. If we move to a town square model, blockchain, well, voila. So number one, we got to understand that as we're buying into these things as investors, we're buying into networks. How fast is the network growing? How many people are on it? How much code is being written? What's the network being used for? What's the velocity? What's the cost? You got to look at all that stuff. That's one very, very, very important point. The other important point here as an investor is speed to liquidity. Why was venture capital created? Venture capital is kind of is a way of investing in stuff that's not liquid. So if you got a company or an idea and I invest in you, I got to give you a seed round, and then I got to give you a Series A, and then you take some risk off and you do some things, and I give you a B at a step up in value, and I give you a C and a step up of value and a D. And each time I give you more money, you need more money, but the risk is reduced, so the value is higher, right?
Right.
And the model is 14 years, 16 years to unicorn to get liquidity. So, I don't know about you, but the actual average individual investor isn't going to keep shelling out money for 14 years on a prayer and a hope that it's going to be a unicorn. There's a lot of risk in that, right?
And a lot of people can't.
And a lot of people can't, just can't, right? And by the way, if you don't have a lot of dry powder as a venture capital, meaning if you don't have a lot of available capital, you risk. I do the seed, like angel investing is hard, right? Because I don't have a lot of money. I do the seed round, I do the A round. And then all these big guys come in, and what do? They dilute me out,
right?
Because I can't keep writing checks, right? So it's a hard thing. You can still make money, but it's a hard thing. So that's kind of the old model, right? I think if you looked at the data, it says that the average time to exit across I don't know, 20,000, 18,000 funds on a deal is like 4.6 years. Now that includes failure, and that includes just a acqui-hire, right? Where they buy the thing for assets. So whatever way you look at it, is 5 years. This market, because we're building networks, is going liquid in a year, 2 years. So now all of a sudden you've got this system where people can buy into networks, and then that thing goes live, mainnet. And then there's not like crazy liquidity, right? Liquidity builds over time. So, you may not be able to get all your money out, but maybe get your cost out or something. But there's this timing thing. And that's what's exciting about this, is that now all of a sudden, everybody around the world can kind of participate in this market. Whereas before you just couldn't. You couldn't. If you couldn't write $1 million check into a venture fund, you couldn't. Our fund, Cosimo X, is tokenized for that reason. Outside the US, $10,000, you're in the fund. Okay, inside awesome. The US, it's more because it's Reg D, it's FINRA, so it's 250,000 inside the US. But it's also tokenized, so that means I'm in and out of the fund if I want, right? And again, that's what blockchain kind of buys you. So those two things, I think you got to get it. If you don't get it, those are the two critical things. Number one, time, right? This is fast, time to liquidity, not full liquidity, but some form of liquidity. And you got to be able to manage it, right? And then the other thing is we're building networks. We're building networks here. Sometimes you build companies, it's not all networks, but the majority, if you're investing in tokens, you're investing in a network. If you're investing in equity, you're investing in companies.
Right. And I think those are two really good approaches to look at this. And I think it's a new way for people can conceptualize it. And for everyone listening, if you didn't follow that, go listen to it a couple times and let it resonate, because that's where things I think are headed as well. And I think that's a really good alliteration of, thinking about the towers and the squares versus networks. I think that's a really, really good way to think about that. But man, you've dropped a ton of really good knowledge on us today, and always like to
everybody's mind right now.
Always like to wrap up with a couple of fun questions. The first, which you kind of talked about earlier, but want to present it in a different way. You've been in this space. You've been a serial entrepreneur for a long time, and you've learned a lot of lessons along the way. If you could go impart 1 to 3, because you have so much experience, I'm going to say 3. If you give yourself 3 pieces of advice when you first got started, what would you tell yourself?
So number 1, is only an idiot runs out of gas in an airplane. Okay. So what does that mean? You as an entrepreneur, your number one job is to make sure there's enough fuel in the tank for you to fight the fight. That's the first thing and the most important thing that you got to do. Number 2, it's all about passion. Passion is a gravitational force that will pull all the resources you ever need to you. Think of passion like a black hole. If you've got it, you're going to get employees. You're going to find other people that like what you're doing, and honestly, they will fall out of the sky. I swear to God, they will fall out of the sky if you're passionate, because people want to be around other passionate people, and they want to be passionate too. And it feels good to be passionate. And let's face it, this is a crusade. We're doing some really cool stuff here, right? We're banking the unbanked. So I know it sounds trite, but I'm telling you, passion. The third is stay positive, man. It's hard. You said it in the beginning, right? You're fighting, you're stressed, it's difficult. As an entrepreneur, just stay true, man. Let go, fight. You're the man in the arena, as Teddy Roosevelt says, right? You're tasting the dust and the sweat and the blood, but you're also got the glory of the win. So just do it, man. Stay true, show that passion, and just what a great time to be an entrepreneur, man. I'm in my 50s. Like, holy cow, there's the more wealth is going to be generated in the next 20 years, 10 to 20 years, and ever imagined. This is exciting time. Exciting time.
100% agree. I think those are 3 amazing nuggets. I don't know if you've ever written a book, but you might be considering something in the future, because you guys a wealth of knowledge in there, man. So we definitely appreciate that.
Well, look, check me out on Twitter. I'm at Rob Frasca, And, you want to see our portfolio, it's cosimox.com. By the way, we named the firm Cosimo, I have to get this, after Cosimo Medici.
Nice.
Cosimo Medici was the patron father of the Medici family that invented the banking system that we're all working to make obsolete.
That's right. I think that's a really cool name. And actually on that, so I know that you brought this up, and I do want to give this again. So for people who are interested, because you said it's tokenized, if they want to potentially participate in Cosimo X, they can reach out to you on your website.
They can go right on cosimox.com. And then what that does is it takes you over to a site called Securitize, where you get all the documentation, KYC, AML, all that good stuff. In the US, you've got to be accredited investor. There's a there's a $250,000 minimum in the US. Outside the US, there's a lower minimum. It's just the state of the world. And like I said, this isn't any investment advice, right? I always got to say that. But yeah, that's how you do it. Cosimox.com. You can see our portfolio out there. We got about 23 deals. We do about a deal a month. We just did an NFT deal called BZ, pretty cool. So we're doing Web3, a lot of cool stuff.
Awesome, man. Well, as we wrap up here, what is a final thought that you want to leave with all the listeners here today?
Final thought is, do your research. There's a lot going on. It's impossible to keep up with all this stuff. Join these networks, get involved. These are all ecosystems. Have fun. I don't know. It's hard. I can't keep up with it.
No, that is
speed is life. It's kind of a holdover from flying. Speed is life. But man, it's exciting stuff.
Absolutely. And I might have just lied because I actually thought of one more question that I do want to ask you that I didn't get to ask earlier. And I think it is important while we have you is as you're looking across at, of course you said, do your own research when you're looking at potential deals, but like, what are some of the things when you're looking at one of your portfolio companies and you're evaluating if you want to bring them in, like what are some big qualifiers that you think is really important while you're doing your research?
Yeah, we like to look at the network, how fast the network is growing, number one. Number two, the team is always super critical, right? Who's running this thing? Have they done it before? Do they know what they're talking about? One of the nuances of this market is syndication value. So in the old world, remember that series A, B, C, D, E. As an investor, you always wanted to look at where there are a lot of deep pockets, where there are big investors involved. In this market, you don't need that. So this market, what you tend to do is look at, and the entrepreneurs have gotten smart, right? Raise small amount of money from a lot of people is always better than raising a lot of money from one guy. Trust me. Okay. It's better to take 10 million from 1,000 people than 10 million from one guy. Trust me. Okay. As an entrepreneur. And the entrepreneurs, and by the way, if you're building a network, you want the people in the network to buy into the network, right? Makes sense. So I would look at that, right? Look at the network and we look at, okay, who else is invested in this and how many people have invested and what's the allocation size and, what's the overall, kind of roadmap. Those are kind of the fundamental, and the tokenomics and all that good stuff are important. But you want to look at how many people are willing to invest into and buy into the network.
Right. No, I definitely appreciate that. I think a lot of people, when they're doing their own research, sometimes they don't necessarily know where to look, whether it's the white paper, where they look at the team, et cetera. A lot of what we typically emphasize is first and foremost, look at the team, look at who's actually building this. And then do they have the experience to try to execute on what the vision is that they have? And then as far as the vision goes, what is their actual road? What does their timeline look like? And can they actually execute upon that? And then kind of, take the rest from there. But again,
there's another thing too, that you look at too. I call them signal callers. So there are some folks that are really pretty decent signal callers, right? Or firms, right? So when you see, some of these bigger name firms come in, they generally bring, it's a good signal, right? It's a good signal to say, hey, wait a minute, Galaxy's getting involved. Maybe I should. Or Coinbase Ventures just put some money in. Maybe I should. Or Binance, right? and it's just because they have a lot of capital, they have a lot of clout, and you know, I mean, look, you know, Galaxy's what, 3-something billion, you know, Coinbase is massive, Binance is huge. And so, you know, don't be afraid also to look at signal callers, but don't be blind to that either, right? You know, just because they're big and they know what they're doing doesn't mean they're right. But you know, if I always, you know, always tell people, look at who the signal callers are. Absolutely.
Well, again, man, thank you for that information. Thank you for everything that you shared today. For everyone listening, if they want more information and want to be able to learn more about your fund, follow you on Twitter, can you just share all that again?
Yeah, it's at Rob Frasca on Twitter. I'm not a prolific Twitter person, but I do every now and then. And the site is Cosimo X, COSIMO, CosimoX.com. That's the fund site. And you can see our portfolio there. We update it. And you can click through. There's all kinds of documentation and all that good stuff there.
Excellent. Well, again, Rob, thank you so much for spending some time with us. And of course, for everyone listening, stay cryptocurrent.